Hello, friends. Good evening, all of you. I'm CA Meena Verma, and we were doing standard costing, last chapter of strategic cost management and performance evaluation. We have 2 sessions more left with us, and in these 2 sessions, we will be cover about remaining topic of standard costing. So, in today's session, we will be cover various remaining advanced variances. Like we all know that we have studied about the planning and operational variance. We have already studied about variance analysis in activity based costing. We have already studied about learning curve variance analysis in case if we apply learning curve. Okay, so now in today's session we will cover a question related to this. Okay, we will cover these remaining topics. So in today's session, we will first cover the remaining theory of all these chapters, all these advanced variances. And we will do some numerical, which is related to reconciliation. Okay, and yes, we have a question related to this relevant cost approach to variance. We will understand that. So in today's session, we will be studying about the remaining variance. Okay. We have already studied about this learning curve. Okay, now let us first understand this variance analysis in case of advanced manufacturing environment. So this is related to any industry, any organization, any firm in which you use a high technology. Okay. High technology means you are producing your goods, you are doing this manufacturing process with the use of robots instead of labor. You're doing the production with the help of the machinery. Okay. High technology, artificial intelligence and all. Okay. So this is all about this topic. So variance analysis generally applies to all the organization where you produce the goods. Okay. But we have some organization which are highly technology, means a firm in which you use advanced technology, no matter the kind of firm you have. But if you are doing the business related to these, you will use high technology. Okay. And work are not done with the help of labor. So you can see here, if we have automotive, like you can see that the Ford company has now, the Ford company is using robots in production. You can see here the assembly line of producing cars. Okay, and they are using the robots instead of the employees, instead of the labor. They are using, see, you can see here in this video, they're using the entire production. In the entire production, they're using the robots. Okay. So in this way, you can see we have already discussed a case study which is related to business process re-engineering, where we have discussed that that the company has changed itself, and with the help of which 75% of the labor, they remove 75% of the labor from their organization. Okay, so this is how technology help your organization to become advanced. And in case if you are using high technology, obviously you don't need labor in that case. Similarly, this is about automobile industry. Similarly, if you are doing something which is related to computer engineering, okay, then also you need technology. Okay, you are doing something which is related to electronic engineering, information technology, medical devices, okay, or nanotechnology, okay, or semiconductors, telecommunication system, okay. So you can see in all these such kind of business, what is actually happening nowadays. See, we have just few examples, but nowadays after corona, you can see many other kind of businesses. People are using the technology a lot. ठीक है. Like nowadays you can see that most of the people are working from their home, and the entire organization is in working work status. They have a work status, ठीक है. Every organization is working, ठीक है. But people are using technology, people are using internet, and with the help of which they are doing their business, ठीक है, from remote area. Even it is possible nowadays to work through remote area. So you can see how technology is helping the people to do the business. And yes, if you use much technology, that will remove the labor efforts from the organization, ठीक है. ठीक है. If you use much advanced technology, then in that case those machines or those advanced technology will remove the labor efforts, ठीक है. That will remove the labor efforts. Now, in case if you have advanced technology related kind of firms, or your business have if your business is using advanced technology, in that case your variable cost, see what actually comes under variable cost: direct material cost, direct labor cost, other variable cost. These all will included in variable cost, ठीक है. But in case of high technology firm, you will not consider labor, because you are replacing the labor with machines and advanced technology. So in case if you have high technology kind of firm, in that case the variable cost will include material, and the main cost is not labor cost, but the main cost is electricity, because for running the technology you need electricity. You want to run computer, you need electricity. You want to run the robots, you need electricity, ठीक है. So electricity now is a main cost instead of labor cost, direct labor cost, ठीक है. So you can see here, in case if you are working in an organization in which you have in which you are using high technology, in that case the main variable cost will be material cost and electricity cost. Electricity cost is a main variable cost, ठीक है. While we will not consider here labor costs, we don't have much labor cost at this place, ठीक है. So this way, if you are doing the variance analysis, you will do the variance analysis which is related to material kind, direct material cost or material variances. You will do that, ठीक है. And you will do the variance analysis of other expenditure, and mainly that will include the electricity cost, है ना. But you can see here that they are not doing the variance analysis of labor, ठीक है, labor, ठीक है. Because see, in case if you will see here, you can say that ma'am, at this place we can see here that some people are working with all these technology, ठीक है. Like here you can see computer engineering, a person is working with technology. Like here electronic engineering, a person is working on machine. So you can say, ma'am, why don't you are considering labor cost at this place? See, these are expert, they are not labor. The people those who are working here, like computer engineers, ठीक है. We all know that chartered accountant, company secretary, we have all 11 list of professionals, ठीक है, doctor, engineer. So they are all experts, ठीक है. So we don't consider them as labor, ठीक है. And learning curve is not applicable to them, and obviously variance analysis, we will not do variance analysis on them, ठीक है. So you can see here, this is about the organization, the highly high tech organization, ठीक है, where you use technology a lot, ठीक है. So in this way you can see the type of cost you have in the firm in which technology is there, high technology is there, है ना. And this is the strategy, this is the strategy. You can see this image, ठीक है. They are automating their organization, ठीक है, with the help of robots, advanced technology. They are automating their organization, and therefore they don't need labor in their organization. They need expert, yes, they need expert, but they don't need labor in their organization, है ना. So this way, this is actually the picture of today's business environment, ठीक है. Nowadays you can see that organization are using technology a lot, which is actually a threat also, ठीक है. It's a threat also. So in this way you can do the variance analysis in case of high tech firms, ठीक है. So in case if question will come related to high tech firm, you can do this variance analysis. Okay, now we have a service sector. Okay, now we have discussed a firm in which we have already discussed a firm in which the organization are using high technology. Now we are talking about a firm which is providing services. Okay, in case of service sector, in case of service sector, you can see the variable cost. If you will observe the variable cost in case of service sector, you will find that variable cost. If you will observe the variable cost in case of service sector, you will find that you will find that variable cost will not include. See, in case of service sector, generally variable cost include direct material cost, direct labor cost, and other variable cost. है ना? This is generally an organization includes variable cost. ठीक है? They includes direct material cost, they include direct labor cost and other variable cost. ठीक है? But in case if you provide any kind of services like chartered accountant, like advocate, they provide services. Obviously, they don't use material. ठीक है? So in their case, you need to consider either the direct labor or other cost. ठीक है? For other cost, for direct labors and other costs, it is good to apply activity based costing, as we have already discussed that it is good to apply activity based costing. And yes, we have already understood that in case if we apply activity based costing, there is scope of variance analysis. This is advanced variance analysis. So you can see here, in case of service sector, we don't use material. Okay, obviously, if you are providing services like a chartered accountant, they are providing consultancy, like an advocate, they're like a doctor. Okay, they don't sell product. Okay, so they don't use material. So obviously, you don't need to consider the material variances. But yes, they use labors for providing the services. They use other variable costs. So in that case, it is good to apply activity-based costing. And for activity-based costing, we have already studied that yes, if we are applying activity-based costing, then there are scope for variance analysis. है ना? There are scope for variance analysis. Okay, so this is about variance analysis in case of service sector. Okay, service sector like accountant, chartered accountant, advocate, doctors, okay, hairdresser, okay, transport companies, hotels, okay. So these are all services. Okay, and you can see that in case of services, they don't have material, they have labor and other variable costs. So you do not consider the material, and therefore you do not consider the material variances. But yes, for other costs, you do what? You apply activity-based costing, and for activity-based costing, we have already studied that how there is scope of doing variance analysis. है ना? Okay. So if you remember that we prepare a cost sheet in case of service sector is like this, है ना? You consider the fixed expenses, you consider the variable expenses. This way you find the operating cost, then you add the profit, then total revenue. So I hope you have done this in CA Inter. Okay. So this is how we do this. We use the standard costing in case of service sector. Okay. Now, in case of public sector, ठीक है, public sector like Indian Oil, ONGC, ठीक है, Bharat Petroleum, ठीक है, these are all example of service sector. So you can apply this variance analysis in service sector also. You know that in case of service sector, they have huge cost, है ना, and obviously huge revenue also. They are big organization, ठीक है. So you can use these variance analysis in service sector also, ठीक है. Sorry, you can use this variance analysis in public sector also. Okay, I will explain this in next session. In next session, we will study about investigation of variances. Okay, so I'll not discuss this in today's session. Okay, so in today's session, we will study only about two concepts. One is related to reconciliation. Okay, and yes, we will do the question which will include the variance analysis of this relevant cost. We have a question related to this. Wait. We have a question which is related to this variance analysis considering the relevant cost. Okay, variance analysis and throughput accounting. Okay, we have some question related to this, but in today's session we will cover this reconciliation, how to prepare the reconciliation statement. And yes, we have a question. We will discuss this question in today's session. Okay, variance analysis in case of activity based costing. We have two questions from yesterday's session, and we will discuss that. But before that, first let us understand how to prepare a reconciliation statement. Okay, how to prepare a reconciliation statement. We have all these things. Okay, so I hope if you remember, if you have prepared a reconciliation statement anywhere, wait. For considering this, for considering this reconciliation statement, what you have to consider here for finding this reconciliation, for making this reconciliation statement, what you have to consider? You have to consider the budgeted profit. Okay, or the actual profit. In reverse you can do also that. Okay, budgeted profit. Okay, you will consider all the variances and then you will get the actual profit. Or you can do like this, like you can consider the actual profit and then you will consider all the variances and then you consider the budgeted profit. So with the help of reconciliation statement, we are trying to find the reason, the variances because of which there is difference between the budgeted profit and actual profit. Okay, so with the help of reconciliation statement, we are trying to find out the reason. Why is there difference? We have budgeted this profit, but this is our actual profit. So why is there difference? Why my actual profit is less than my budgeted profit, or why my actual profit is more than my budgeted profit? What are the reason? I want to analyze all these things. I want to find the reason why, because of what there is budgeted in actual profits. Okay, and for that this reconciliation statement will help us. Okay, so in this case what will we do? What will we do here? See what we have. Actually we have the sales. We know out of sale we consider the material cost. Then we consider this direct labor cost. Then we consider other variable cost. Okay, then we consider the fixed cost. Okay, these are all the cost. Okay, sale minus cost, we will get the profit. है ना? We will get the profit. Now see, if I'm considering here the actual profit. Okay, at this place I'm considering my actual profit, and at this place I'm considering my budgeted profit. So the difference between the actual profit and budgeted profit, the difference between them may arise. Either there is some difference because of sale, because of sale in quantity, might be there is difference in quantity or the price, है ना? It might be possible that I'm selling actually more than the budgeted price, or I'm selling more quantity than the budgeted quantity, or vice versa. Similarly, there might be some difference, like I'm using more material, or the cost of material is more or less than the budgeted. So because of which the profit is different, the actual profit is different from the budgeted, है ना? Or might be because my actual labor cost is different from my standard labor cost, because of which my actual profit is different from budgeted profit. So you can see that difference in sale might affect the actual profit from the budgeted profit. Difference or some fluctuation at this place, material cost. Okay, material may include the volume and price variance. Okay, sale may include the volume and price variance. Because of them, this difference between actual and budgeted profit is arising. Similarly, difference between the direct labor cost, है ना? Or why this direct labor cost is different, it might be possible that volume is different, or the rate is different, because of which this difference between the actual profit and budgeted profit is arising at this place. Similarly, these things. So you can see, if any of them will vary, that will affect the actual profit, है ना? If your number of unit sale in quantity will vary, obviously that will impact your actual profitability. If the selling price will vary from the standard selling price, obviously your profitability will vary. If your cost will vary, if cost will be less, then profitability will increase, actual profit will be more. If cost will increase, obviously the actual profit will decrease. So this way you can see how sale, how cost, how sale in quantity, how sale price, how quantity, because of which the cost will vary, and because of all these things you can see there is difference between the actual profit and budgeted profit. So that is why we will consider all these things. The variances arises because of the sale, the variances arises because of the direct material cost, the variances arises because of the direct labor cost, the variances arises because of the other variable cost, the variances arises because of the fixed cost. Because of all these reasons, if there is any kind of variances, we know that the actual profitability will be different. So this way, it will help us to make a reconciliation statement, and we can, after this may help us in further investigation or analysis. Okay, this reconciliation, why are we preparing this reconciliation statement? We will use this in next session. This will help us in further investigation, finding the reason why my actual profit is less than my budgeted profit. Why? I can find the reason after finding these variances, these these reasons because of which there is difference, and I can do further analysis. Why is this happening? And it might be possible in answer you have to write all these things. Why is there difference? Okay, why is there difference? So this way you can prepare a reconciliation statement. Okay, it's very easy to prepare a reconciliation statement. See, I have two questions. I'll consider two questions in today's session. Okay, I'll consider, yeah. First of all, I'll take a small question, then I'll take a big question. Okay, so this is my question. This is my question. Okay. And first, I want all of you to please read it once. Okay, just read it. Read this question. Okay, let me read this question with you. See, we have a manufacturing company, Osaka Manufacturing Company. Okay, it's a leading consumer goods. It's a leading consumer goods company. Okay, the budgeted and actual data of this company is given of the year for the year 2018-19. Okay, we have the budgeted sale in units, actual sale in units. Okay, and we have the difference Similarly, we have sales, budgeted sale, we have the actual sales, and we have the variance. We have the variable cost, okay, the budgeted variable cost, okay, and we have the actual variable cost, okay, and we have the variance, okay. Similarly, we have this variable fixed cost, budgeted fixed cost, actual fixed cost, and we have the variance. We have the profits, budgeted profit, actual profit, and we have the variance, okay. Now they're asking you prepare a statement showing reconciliation of budget profit to the actual profit. So you have to consider the budget profit, and you have to consider the actual profit, and you have to prepare a reconciliation statement finding the reason why the budgeted profit, why the actual profit is different from the budgeted profit. So you have to prepare it, okay. You have to prepare a reconciliation statement, okay. Now what they have also mentioned you through marginal costing approach. So marginal costing approach means you are considering the selling price, you are considering the variable cost, and you are considering the contribution. So this way, marginal costing approach, with the help of this marginal costing approach, you have to prepare a reconciliation statement, okay. Okay, let me do this. I hope you don't have any doubt. Do you have any doubt? Let me first take it in case if you have any doubt. Let's go on. If you have any doubt, you can ask me. See, I want to show you in our book. I want to show you in our book this. Wait. You can see that we have two ways to prepare a reconciliation statement. One is marginal costing method and another one is absorption method. So accordingly, since in the question you have already read that they have asked you to use the method of marginal costing. So you will use that method. Otherwise, we have another method of absorption costing also. So we have two methods for preparing the reconciliation statement. Okay. Okay, let me do this question. In this question, I will use this sales variance because we have to consider the sale also. Okay, so I'll use the sale variance also at this place. Okay. So I'll use this. Okay. Okay, let me do this question for you. Here, let me do this question. Let me prepare this reconciliation statement. Statement of reconciliation okay, budgeted versus actual. Okay, budgeted versus actual. Okay, so we have particulars. Okay, we have particulars. Okay, we will consider what, since we have to prepare a reconciliation between budget and actual, so we will first consider the budgeted profit. We will first consider the budgeted profit. Okay, and then we will consider sales volume variance, and that too we will consider this contribution. Why this contribution? Because they have asked you to they have asked you to prepare this reconciliation statement through marginal costing method, है ना? You can see here, through marginal costing approach, you have to prepare this reconciliation statement. Okay, so that is why we will consider this sale volume contribution. Sale volume contribution. Okay. 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 Next, what will we consider? Sales volume and sale price variance. Sale price variance. Okay, what else? We will consider variable cost variance. Okay, what else? We will consider fixed cost variance. Okay, so this way we will get actual profit. We will get actual profit. Okay. See, we have the budgeted profit at this place, the actual profit at this place, and I'm taking them. Okay. We have the budgeted profit as rupees 5,19,000. And we have the actual profit as 2,88,000, 2,88,750. So this is, sorry, this is my 2,88,750. Okay. So you can see here that from this information, it is very easy to find this variable cost variance. With the help of this information, it is very easy to find the fixed cost variance. Okay. And now see, we have what? We have sale, we have variable cost, and we have fixed cost. Variable cost is not further divided into direct material, direct labor, other variable cost. It might be possible that this cost, in some question, this cost may be broken down in such way, like they have given you the direct material cost separately, direct labor cost separately, and other variable cost. In that question, solution will be lengthy. Okay? But now in this question, you can see that we have given this variable cost, combined variable cost, which includes everything, direct material, direct labor, everything. Then we have fixed cost. So we will have to calculate this fixed cost variance. We will have to calculate this variable cost variance. Okay? And sales variance. The sales variance may arise from change from, see, the sale variance may arise either from change in quantity or change in price. है ना? The sales variance may arise either from change in quantity or change in price. Okay? So we have to calculate them separately. But yes, there are some other information also given in this question. What are those information? It is given here in this question, the budgeted data shown in the table is based on the assumption that total market size would be 4 lakh units, but it turned out to be 3,75,000 units. See, generally what happened? I have, for example, this is entire market, and my organization or my product has captured some portion of this market. For example, my company has this share of the market. Okay? So same way you can see that the budget data means the size of the entire market, that in the entire market you can sell maximum 4 lakh units. This is given here. In the entire market, you can maximum sell 4 lakh units. Okay? while now actually what happened, it turned out like what, this market, in this entire market, you can now sell maximum how many units? Now how many units you can sell? 375. Okay, this much units. This is the size of entire market, remember. Okay, this is what the size of entire market. Now out of this entire market, how much units my organization, this Osaka manufacturing company, will sell? Okay, out of this entire market, this was the budget. This was the budget. Okay, in this entire market, every organization can sell maximum 4 lakh units. But out of those 4 lakh unit, how many units my organization, this Osaka manufacturing company, can sell? Out of all these, this Osaka company can sell how much? 2 lakh units. Half of the 4 lakh, है ना? 2 lakh units. 2 lakh units. Okay, so 50%. The budget is to capture 50% of the market. However, actually what happened? Actually, how much units my organization is selling? 1,65,000 units. This is my actual sale. This is the actual sale of my product. This Osaka manufacturing company's product, actual sale is this. However, the size of the market is also changed to this. Now you can see here that there is two kind of changes. One is due to planning and another one is due to operation. है ना? Planning, why? Because you have changed this, the entire industry market size, that in the entire industry you can sell 4 lakh units. Now it has changed to 3,75,000. But you have actually, it was budgeted that Osaka can actually sell 2 lakh unit in the market, while now it can sell, they are actually selling this 1,65,000 units. So here we have option to calculate what we have. Option to calculate in the sales volume variance, we have option to calculate what? Planning variance and operation variance. We have option to calculate this planning variance and operation variance. Okay, planning and operation variance. Okay, now why don't we are considering here, ma'am, in variable cost variance, it is possible to consider what? Expenditure variance and efficiency variance. But why are we not considering? Because we don't have information in detail about that. Change in quantity, change in price related, that we have a question related to this, which is a quite lengthy question, so I'll take it next. Okay, this is the question in which, this is the question we have in detail. See, let me show you the question. This is the question we have in detail. We will do this later on. Let me first do a simple question, है ना? So in this question, we don't need to do this, since we know that variable cost is further divided into expenditure variance and efficiency variance. But we don't need to consider them since we don't have information related to that. But yes, for sales variance, we can find this volume variance and price variance. Volume and price variance. Why? Because I can find the difference in price also, and we have the difference in volume. Okay, change in quantity also, it is clearly given. Okay, change in quantity and change in price, both is given. So for sales price variance, for sales variance, it is easy for me to calculate here the sales price variance, and it is easy for me to calculate the sales volume variance. And for calculating the sales volume variance, I can further divide it into two parts. What? Planning variance and operation variance. Okay, and I have all the information related to these three variances, to find these three variances. So I will find here the planning variance. I will find here the planning variance. Okay, and I will find the operation variance. Okay, I will find the operation variance. So in this question, you can see if you want to prepare this reconciliation statement, what you have to consider three things: sale, variable cost, fixed cost, the variance which arises due to sale, the variance which arises due to variable cost, and the variance which arises due to fixed cost, है ना? Because we have all three informations. Variance arises due to sale, variance arises due to sale, ठीक है, variance arises due to variable cost, and variance arises due to fixed cost. We have all these three things, ठीक है, for which we will find variances, ठीक है. But yes, for sales we can further divide into what? Volume variance and price variance, ठीक है. And volume variance can also further divided into planning and operation variance, because we have such information. If we don't have information, we can't do that. But since we have information which can help us to find the planning variance, sales planning variance, and sales operation variance, so we will use that and we will find these things also, ठीक है. Sales planning variance and sales operation variance, we will do that, ठीक है. Okay. Now, before starting with this question, I want all of you, see, for this, I'll show you a formula. What formula? We have a formula. Wait. We have a formula related to planning variance and operation variance. I'll write that formula for you. Okay? And I expect all of you to find these variances. Since this variance, you can easily find this variance and leave the space for these two variants. I'll tell you how to calculate these two variants, okay? But first find these three variants. It is very easy to find these variances, okay? So I expect all of you to give me the answer related to finding the variable cost variance, fixed cost variance, and sales price variance. I want you to find these values, okay? Okay, I actually want to make a new table, okay, which will help me to solve this question easily, okay? I want to make a new table which will help me to solve this question easily, okay? So I'm making that table that will help us to solve this question easily, okay? Now in this table, I want to find the actual selling price and budgeted selling price. है ना? That will help me to find the sale price variance. ठीक है? तो selling price I want to find. ठीक है? The budgeted selling price and the actual selling price. For that, what will I do? Sales divided by the number of units. So this way I'll get the budgeted selling price, and that will help me to find the sale price variance. Similarly, I'll find the actual selling price by dividing these two information. I'll get the actual selling price. ठीक है? Divide it, give me the answers. ठीक है? Similarly, for finding the variable cost variance, ठीक है? For finding the variable cost variance, I want what? I want this variable cost rate, this rate. I want to find it. ठीक है? What will I do? I'll divide this variable cost with the output, variable cost with the output. ठीक है? So I'll find it. Variable overhead, I want to find it, rate. Okay, I want these two information in order to find the sale price variance and sale price variance, and this variable cost variance and fixed cost variance, these three things. Okay, so this value, dividing them, what will I get? Can you give me the answers? Can you give me the answers? I'm waiting for you. Yeah. Can you give me quickly, divide these two values, give me the answer quickly. See, I'm waiting for you to give me this answer. This is 10.50. How I find the standard selling price, the budgeted selling price, total sale divided by number of units sold. ठीक है? Budgeted number of unit which you want to sell. ठीक है? And here this value dividing these two things, I'll get what? 10.26. है ना? Similarly, for finding the variable overhead rate, what will I do? I'll divide this with this. I'll get what? Variable overhead rate. Budgeted variable overhead rate is 6.33. And at this place, I'll divide this with the output. I'll get the actual overhead rate, which is 6.51. ठीक है जी? And see, these three things are very easy to find. What three things? Sale price variance, variable cost variance, and fixed cost variance. Please calculate it and give me the answer. See, this is something which is related to CA Inter. You have all the information. You can easily get this information to find the values. ठीक है? ठीक है? Variable. Find it at your own. Don't just copy me. Find it. Variable cost variance. Actual production. Standard cost, the standard variable cost per unit. ठीक है? Minus actual cost per unit. Okay. So this way you can get this variable cost variance. Okay. Okay. One thing you may ask here, ma'am, can't we do this? Like, is it this, ma'am? This value is not variance, cost variance. See, we will consider here the cost for actual output, the variable cost for the actual output. Okay, actual production. ठीक है? We want if you want to consider this variable cost variance, you have to consider the standard cost for actual output and actual cost. है ना? Standard cost for actual output minus actual cost. है ना? So you can't do like this, like you cannot simply minus these two values. Why? Because this variable cost is related to producing 2 lakh unit, but actually we are producing 1,65,000 units. So for producing 1,65,000 unit, we have to consider the standard cost, है ना? Standard cost for actual output. ठीक है? So that is why you can use this formula, actual production. ठीक है? ठीक है? Actual production into standard variable cost per unit minus actual cost per unit. ठीक है? Solve this value. I want all of you to do this at your own. ठीक है? And give me the answer. Similarly, fixed fixed cost variance see, I want to show you the formula also. ठीक है? You have consider these are the things which you have already done in your CA Inter. ठीक है? So you can see here, if you want to, you have to find this fixed cost variance. ठीक है? So for that, what you have to consider, this absorbed fixed overhead minus the actual fixed overhead. So this can be further divided into budgeted fixed overhead minus actual fixed overhead less absorbed fixed overhead less budgeted fixed overhead. Okay, so this way you can consider here. Okay, the fixed overhead, total fixed overhead variance can be further divided into two parts. Okay, what are these two parts? One is expenditure variance, another one is volume variance. Okay, so one is volume variance and another one is expenditure variance. See, I want to tell you everything in detail. Okay, volume variance and expenditure variance. Now, what is volume variance? Volume variance is absorbed fixed overhead minus budgeted fixed overhead. Okay, so absorbed fixed overhead minus budgeted fixed overhead. Okay, these two values. Next, expenditure variance, budgeted fixed overhead less actual fixed overhead. Budgeted fixed overhead minus actual fixed overhead. ठीक है, budgeted fixed overhead minus actual fixed overhead. ठीक है, so if you will see here that if you want to find this fixed cost variance, ठीक है, you can see here this fixed cost volume variance, the value of this is nil. ठीक है, ठीक है, the value of this is nil, and the fixed cost expenditure variance, the value of fixed cost expenditure variance, we will consider that this is nil. This is the value which you have to find. You will add these two values, you will get the fixed cost variance. Okay, so what is the budgeted cost, what is the actual fixed cost? Okay, this is the budgeted cost, this is the actual cost. Okay, this is the actual cost. What is the budgeted cost? See, I'll tell you why it is nil. 3,15,000 minus 3,30,000. Okay, so this way you will get fixed cost expenditure variance. Now, what about this absorbed fixed overhead? We will consider that the fixed overhead absorbed is the same as the budgeted overhead. Okay, as nothing is mentioned here. Okay, so we will consider the budgeted fixed overhead, absorbed fixed overhead is equal to budgeted fixed overhead. Okay, how you generally absorb the fixed overhead? You generally absorb the fixed overhead considering these unit, है ना? Fixed overhead you generally do you consider these units and then you absorb it. Okay, so this way if you will consider it, if you will solve it, you will get this value as nil. See, in this question it is not easy for me to explain this, but yes, you will understand this in next question. Okay, you will understand this in a better way in next question. Okay, how this absorbed fixed overhead minus budgeted fixed overhead, why these absorbed and budgeted fixed overhead is equal and why is this value is nil, I will explain you this in next question. Because in next question we have all the figures in detail, so it is very easy for me to explain this in next question. Okay, so in this question, since this value is nil and we will consider this fixed cost expenditure variance, which is this difference as rupees 115,000. If we will add these two values, we will get this fixed cost variance. So this way you can calculate the fixed cost variance, you can calculate the variable cost variance and the sale price variance. Okay, give me the value if you can calculate. Okay, what is the fixed cost variance? It is 15,000 adverse. Okay, we have already calculated 15,000 adverse. ठीक है, fixed cost expenditure variance plus fixed cost volume variance, we will add them, we will get fixed cost variance. ठीक है, fixed cost volume variance is nil, so if we will add these two values, we will get fixed cost variance, which is 15,000 adverse. ठीक है, ठीक है, are you getting me? Please tell me it is clear or not. Okay, 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 very nice, I got the answers, very nice, very nice. Okay, so you have given me the variable cost variance, very nice, very nice. Find the sale price variance. Similarly, find the sale price variance. Give me the answer of sale price variance also. All the student. ठीक है, find the sale price variance also. ठीक है. First, let me find the variable cost variance. Let me find the variable cost. See, I think I have written the formula somewhere. Yes, I'll write it here itself. Okay. Actual production is 1,65,000. Standard variable cost per unit. Standard variable cost per unit is 6.33. Actual cost per unit is 6.51. Okay, so if you will solve this, you will get the value of variable cost variance, which is, give me the answer. Similarly, now calculate the sale price variance. Sale price variance. ठीक है, see, I hope this variable cost variance is clear. Actual production into standard variable cost per unit minus actual cost per unit. ठीक है, what is the standard variable cost per unit? Standard variable cost per unit is this. Actual variable cost per unit is this. Consider them into actual production. What is the actual production? 1,65,000 is the actual production. ठीक है, 1,65,000 is the actual production. ठीक है, consider these value. ठीक है, this and this value. So this way you will get variable cost variance. Similarly, find the sale price variance. What is the formula for sale price variance? Actual selling price per unit minus standard selling price per unit, ठीक है, into actual sale quantity. Actual sale quantity. So what is the actual selling price per unit? We have already found this is the actual sale price per unit. What is the standard selling price per unit? This is the standard selling price per unit. What is the actual unit which you are selling? This is the actual unit which you are selling. So this way it is very easy for you to calculate this sale price variance also. Give me these three values. See, it is very easy to calculate these three values. Give me the variable cost variance, give me the price variance, give me fixed cost variance, fixed cost expenditure variance. Give me these value. Okay, quickly. I'm waiting for you to give me the answers. So Sale price variance, you have given me the answer. See, I'll not calculate this. You have given me the value 396 adverse. How? Actual sale is 10.26 है ना, 10.26. ठीक है. Standard selling price is 10.50. 10.50. What is the actual production? 1,65,000 units. This is the actual production. है ना. ठीक है. Raman has given me the answer. Anjali has given me the answer. Very nice. It is adverse or favorable? See, it should be adverse because actual selling price is less than the standard selling price. See, how can I find this is favorable or adverse? You can see here that the actual selling price is less than the standard. It means it is adverse. It is adverse, है ना? Since the actual selling price is less than the budgeted, it is adverse. ठीक है. So it is adverse. Since the actual selling price is less than the standard, it means that the situation is unfavorable. है ना? This is adverse. So this is adverse. ठीक है. So what is this value? This value you have given me 297. I hope I'm not fast. ठीक है. Please do this question at your own. Try to do this question at your own. Don't just copy me. Okay? Don't just copy me. Try to apply your brain and try to do this question at your own. Since I have a similar question and most of the students, they fail to do that question in examination. That question is from examination question. And most of the students, they fail to do that question. So I hope so. Question from reconciliation. See, let me show you the question. This is the question. And this is a question similar to that one which we are doing. And most of the student, they fail to do this question. So please try to apply your brain. Don't just copy me. Try to find the reason why and whatever we are doing, why are we doing? Okay, try to find the reason. Okay. So this way we got the sale price variance, we got the variable cost variance. Okay. What is the value of variable cost variance? This is 29700 adverse. Sale price variance, this is, you have given me the value 39600 adverse. I hope everything is written correctly. ठीक है जी. So this is the situation. Now let us find the sale volume variance. Now in sale volume variance, we will calculate two things. What two things? One, planning variance, one, operation variance. Why, ma'am? Why? Why? Because we have information related to that. Now let me show you the formula for finding the planning and operational variance in case of sale. In case if we have a sale, how to find the planning and operational variance. I hope I have the formula. Yes, this is the formula. In front of your screen, you can see here. Wait, not here. Okay, let me write the formula. Okay, what is the formula for sales volume planning variance and what is the sales volume contribution planning variance, sales volume contribution operation variance? What is the formula for them? Okay, so let me write that. Okay, and then I want all of you to do that. Okay, try to do that at your own. Okay, sales volume ठीक है, contribution planning variance. Okay, so the formula we have is budgeted market share percentage into actual industry sale quantity in units. ठीक है, minus budgeted industry sale quantity in units. ठीक है, into average budgeted contribution per unit. Average budgeted contribution per unit. If you can find these value, budgeted market share. What was the budgeted market share? See, this is what we have already discussed. This is the market, this is the budget, this is the budgeted market. Okay, this is the actual market. Okay, this is the budgeted market, this is the actual market. We have already discussed the total sale in the budgeted market for the entire organization in the market. The sale in the market, see, they are talking about the market. Okay, in the market, you can sell 4 lakh unit. Any company can sell 4 lakh, total 4 lakh unit in the market. However, for this company can sell maximum 2 lakh unit. In this case, this company can sell maximum 2 lakh units. So what is this share? What is this budgeted market share here? Budgeted market share. You can see here, it is clear to us, 2 lakh divided by 4 lakh, that is 50%. 50% share. This company occupied, was budget to occupy 50% share for this company. है ना? While what was the actual sale in the market? 3,75,000. This is the actual sale of entire organization in the entire market, है ना? 3,75,000. Out of which this company is selling how many units? 1,65,000 units. 1,65,000 units. So this way you can find the actual market share of this company. Okay, what is this value? Actual market share of this company. What is this value? What is this value? Can you give me this value? Yeah, this is 44%. Okay, so you can see in the question you need these information. Okay, where is the question? Yeah, here you can see what you need: budgeted market share. For finding the sales volume contribution planning variance, you need to consider the budgeted market share. What is the budgeted market share here? What is the budgeted market share? You have calculated 50%. Budgeted market share is 50%. What is the actual industry sale in quantity? You know, the actual industry sale in quantity, you know that it is given. In the market, actual sale in the market, you know what is actual sale in the market? In the entire market, the actual sale is this. Okay, so actual industry sale, see, they are talking about industry. See, there is a difference. Let me tell you this thing also. There is a difference between industry and your own There is a difference between the entire industry, and in that industry you have a firm. I hope you know this. I hope you understand this. Entire industry, the sale of entire industry will include the sale of other organization also, other firm also. So they have asked you to consider here the actual industry sale. Okay? So the actual industry sale, the actual industry sale is what you can see. The actual complete industry sale is this. Then what they have asked you to consider, budgeted industry sale. What was the budgeted industry sale? This was the budgeted industry sale. Industry means industry will include all other organization also. ठीक है, the sale of all other, मतलब in total sale. ठीक है, total industry will include all the firms, all the organization, all the companies. ठीक है. So industry sale is this. This is the budgeted industry sale. This is the actual industry sale. And out of them, this is the sale of this company, Osaka Manufacturing Company. This is the actual sale of Osaka company. This is the budgeted sale of Osaka company. Okay, I hope you understand the meaning of these terminology. Okay. Into average budgeted contribution per unit. So this is what you have to calculate. Average budgeted contribution per unit. How to calculate that? Average contribution per unit. For that, what you need to consider? The budgeted sale, है ना, minus budgeted variable cost, है ना, divided by your budgeted sale of the organization, है ना, organization. So what is the budgeted sale of the industry? Sorry, what is the budgeted sale of the company? This 21 lakh. 21 lakh is the budgeted sale of the company. Okay, what is the budgeted variable cost? This is the budgeted variable cost. Okay, if you will consider both these things, you will get contribution, budgeted contribution. Okay, so 21 lakh minus budgeted variable cost 12 divided by budgeted sale. What is the budgeted sale? 2 lakh. So this way you will get what? Average budgeted contribution per unit. So I hope now you can solve it very easily. है ना? 50%. Okay. What is the actual industry sale? Actual industry sale is 3 lakh something. What is the budgeted industry sale? 4 lakh something. 4 lakh. है ना? And into this value, the value which you will consider here, you will find here. Okay, this value. Solve this. Give me the answer. Okay. So this way you can calculate the sale volume contribution planning variance. Okay. Solve it. Give me the answer. Okay. Sales volume planning variance is what? Okay, you have already calculated. Very nice. Hema, very good. Other student also, I want other student also to calculate this and give me the value. So this way we will get what? This way we will get sales volume contribution planning variance. This way we will get sales contribution planning variance. Okay. After this, calculate the sale volume contribution operation variance. Let me give the formula also for operational variance so that you can do the second portion also. है ना? Sale volume contribution operation variance. operation variance. So how will we calculate this value? We have to consider the actual market share in percentage. ठीक है, minus budgeted market share in percentage, ठीक है, into actual industry sale in quantity in unit, ठीक है. Average contribution per unit. So consider these values, you will get the answer per unit. Okay. I hope you have calculated this. I want the sales volume planning variance from all of you. Okay, solution of this. And for this, what you have to consider, actual market share, budgeted market share into actual industry sale. Okay, into average budgeted contribution per unit. Okay, what is the actual market share? What is the actual market share? See, the same question. This percentage is the actual market share. है ना? This is the actual market share. What is the budgeted market share? This is the budgeted market share. So this way you can consider the actual market share and budgeted market share, actual market share and budgeted market share. What is the actual industry sale? 3,75,000 is the actual industry sale. है ना? See in the question, you can see. What is the actual industry sale? Industry sale is this, company sale is this. This is the industry sale, actual industry sale. This is the company sale. Okay. So 3,75,000 is the actual industry sale. Then average budgeted contribution. This is what we have already calculated. This is average budgeted contribution per unit. Okay. Consider these value, find, give me the answer. Okay, both the part of the question. Okay, these two. Solve it, give me the answer. Solve this, give me the answer. Solve it, give me the answer. I'm waiting for you to solve this and give me the answer. Solve this, give me the answer. I'm waiting for you to give me the answer. Okay, I got sales planning variance from Raman, sales planning variance from Anjali, Hema. I want other student also to give me the answer. Hema has given me the sales volume operational variance also, but I want all the other student also to calculate the sales volume contribution operation variance. Okay, both these value. Give me these two values. Okay. Give me these two value. I'm waiting. Okay, I got answer. For this, I got answer from Hema and Anjali. Okay. I guess this value. Give me the answer. Calculate it, solve it. Give me the answer. I want all of you to give me the answer. Don't just copy me. Okay? I'm repeating this again and again. Don't just copy. Okay? Try to find out why are we doing it the way we are doing. Okay? Try to find out the reason. Okay? See, most of the student in the examination, they fail to do the similar question. Okay? So that is why I want all of you to please try to understand the question and try to do this question. Okay? At your own. Don't just copy me. Okay? So in this case, if you see this question, you will find that in this question, they have asked you to prepare a reconciliation statement between the budgeted profit and actual profit. They ask you to prepare a reconciliation statement. ठीक है, budgeted profit and actual profit. For that, why is there difference between the budgeted profit and actual profit? Because there might be some changes in sale, there might be some changes in cost, है ना? Now see what are the information you have. On the basis of the information, you will find various variances. Okay, you will find it. Okay, so if I have much information, I'll find more variances. If I have less information, I will find less variances. Okay, according to the information I have, I'll find the variances. Since in this question, you last two lines, these information will help me to find the planning and operation variance of sale. So that is why we are finding in sales volume variance, we are finding the sales volume planning variance and sales volume operation variance. Okay. So in case, I hope this question is clear to all of you, and I want all of you to do this. Okay, I want these two value, planning and operation variance. So we have done this calculation. I just want answer from all of you for the planning variance and operation variance. Okay, I want all of you to calculate it, do it at your own. Okay, because okay, Raman, I want other student also to give me the answer. Sales volume contribution operation variance, this is 93825 as given by Raman. Okay, and this is different from Anjali. Why? Nine eight. Anjali, your answer is not correct. Please check. This value is 93825. Okay. Anjali, please check. Your answer is not correct. Sales volume contribution operation variance is not correct. Please check it, beta. Please check it. Please check it. Your answer is not correct. This is 52125. Anjali, please check your answer. Hema, your answer is correct. Raman, your answer is correct. Anjali, your answer is not correct. Please check it. Okay, it's clear. So you will put these value at this place and you will get the answer. Okay. So this is operation variance 93825. Planning variance is 52125 as given by all of you. This is the values. Okay. So this way you can prepare a reconciliation statement. है ना? Okay, simple question. This was a simple question because after this we have a more complicated question, and this is a question from examination. See, I have a more complicated question now. Okay, and this question is from examination. In this question, you have to prepare a reconciliation statement again. Okay. You have to prepare a reconciliation statement again. See, I have done some changes in this question, which I want you to do at your own. Yeah, this is the question. Okay. So this is the question we have. This is the examination question, May 2018. Okay. And I have read the comment on this question. Okay. And on that comment, it was mentioned that most of the student, they fail to attend this question. Most of the student, they fail to do this question. So let us do this question. Okay. And see, the previous question is a base for this question. Okay. So let us read it. I want first all of you to read this question, then we will discuss. Just read it once, then we will discuss. Okay, I want all of you to first read it. Okay, read it quickly. Read it. Okay, Anjali, can you tell me why were your answer were wrong? Send me in comment section why your answer was wrong. Sales volume, operational variance, why your answer were wrong. Please check it. Okay, and tell me why were your answer wrong. Okay. Okay. Read this question. Okay. Quickly tell me, Anjali, why your question was wrong. Why your answer was wrong. Read this question. Read this question quickly. Okay, let me discuss this question. Trident Toys Limited manufactures a single product and the standard cost system is followed. Standard cost per unit is worked out as follow. Okay. So these are the standard cost per unit. These are the standard cost per unit. The material cost per unit. The labor cost per unit. The variable overhead per unit. The fixed overhead per unit. Okay. And the standard profit. Okay. So if we consider this, you can easily find the sale price. It is very easy for you to calculate the sale price, है ना, at this place. And in case if we need contribution, it is easy for us to calculate that, है ना. Okay. Overhead are allocated on the basis of direct labor hours. In the month of April 2019, there was no difference between the budgeted and actual selling price. Okay. And there were no opening and closing stock during the period. So they have clearly given you here some information. Okay. What information? In the month of April, there was no difference in the budgeted and actual selling price. Means the budgeted selling price, and the actual selling price was same. So it means that there is no sale price variance. है ना? Because you can see that in the formula of sale price variance, we need budgeted sale price minus actual sale price, which is same. If they are same, there is no difference, so we don't need to consider the sale price variance. है ना? Okay, there is no opening and closing stock during the period. Okay. Okay, the other information, the other detail for the month of April 2019 is given here. ठीक है, what production and sales, ठीक है, budgeted sale unit you produce is equal to sale. Why? Because there is no opening and closing stock. It means if whatever you are producing, you are selling. Okay. So it was budget to produce 2 lakh unit, but actually you are selling to 1800 units. Okay. Direct material cost. This is the direct budgeted direct material cost, actual material cost, budgeted labor cost, actual labor cost, variable overheads, budgeted variable overheads, actual variable overheads, budgeted fixed overhead, actual fixed overhead. So we have all these information with us. Now what they have asked you to prepare a reconciliation statement between the budgeted and actual profit with the help of variances according to each of the following methods. So first you have to consider the conventional method and you have to prepare a reconciliation statement. Okay. So let me tell you how to do this question. See what you have to do here. You have to prepare a reconciliation statement of reconciliation between budgeted profit and actual profit, है ना? This is what they have asked you to do. They have asked you to prepare a statement, a reconciliation statement. ठीक है, they have asked you to prepare reconciliation statement between the budgeted profit and actual profit. ठीक है जी. So this is what you have to do. You have to first consider the budgeted profit. ठीक है. Then you have to consider the reasons why is this profit is different from the actual profit. So what might be the reason? The sale and the cost. Now sale can be further divided into sales volume variance, sale price variance. So I'll consider both sale volume variance and sale price variance. You have to consider. You have to consider the sale price variance and you have to consider the sale volume variance. This way you will get the sales variance. है ना? Now for finding the cost variance, the cost can be further divided into material cost. See, in this question, since the information related to material is given, therefore we have to consider the material cost variance. Then the information related to labor is given, and that is why we have to find the labor cost variance. Okay? And since the variable overhead is given, so we have to find the variable overhead cost variance, and the information related to fixed overhead is given, and therefore you have to find the fixed overhead variance. Okay? So this is a big question. Okay? You have to find a lot of things in this question. Okay? Now, since for finding the material cost variance, you have information with the help of which you can find both the price variance and volume variance. Direct material price variance, direct material volume variance. You can find both with the help of the information which we have here. Similarly, with the help of the information which is related to direct labor, we can find both. Okay, we can find both efficiency variance and expenditure variance for the labor. है ना? Similarly, for the variable overhead, we can find the expenditure variance and efficiency variance. Okay. Similarly for fixed overhead variance. So you can see here that this question is quite lengthy. Okay, you have to find many things. So after finding the sales volume variance, sale price variance, you have to find the material quantity variance or usage variance. Okay, you have to find the material usage variance, then material price variance. Then you have to find the material price variance. Then see, with the help of the quantity and price variance, you can get the material cost variance. ठीक है. Similarly, we will find the labor cost variance. For labor cost variance, you have to find the labor efficiency variance. Labor efficiency variance and labor expenditure variance. ठीक है. Now you can easily calculate these values: material variance, material quantity variance, material price variance, labor efficiency variance, labor expenditure variance. It is very easy for you to calculate these things. ठीक है. ठीक है. Then variable overhead expenditure variance, variable overhead efficiency variance. ठीक है. Variable overhead efficiency variance, then variable overhead expenditure. ठीक है. Variable overhead expenditure variance. ठीक है. See, in previous question, we just have to consider the sale, variable cost and fixed cost. Now we have more information. Like in variable cost, we have information related to material, we have information related to labor. So that is why we have to find the variance also. We have to find the variance related to material and we have to find the variance related to labor. Okay. Okay, since fixed cost is given, so we have to consider the fixed overhead expenditure variance. And fixed overhead volume variance. Okay. All these information, after all these, you will get actual. See, I know I have taken a big question, but since most of the students, they fail to do this question in examination, and that is why I want to explain this question to all of you. Okay. I know the question is very lengthy. Now, if you will read the question, try to find out, first write these formula so that it will be easy for you to find the information which you want to solve the question. है ना? Like you have to find the standard price, actual price, the standard rate, actual rate, the standard cost per unit, actual cost per unit, these information. We want all these things to find these variances. Okay, can you do this? Can you do this at your own? Is it possible for you to do this question at your own? ठीक है. Okay, so first, if you want to solve this, see, this is a big question, and if you want to solve this question, first write all the formula which you want to find here. Okay, first write the formula of finding the material quantity variance. What is the formula of finding the material quantity variance? Standard price into standard quantity minus actual quantity. This is the formula for finding the material quantity variance. What is the formula for finding the material price variance? Material price variance, standard price minus actual price into actual quantity, है ना? This is the formula for me. ठीक है. Now let us go to the question and see. Let me do it one by one. Okay. Let me do this one by one. Let me go in the question and let me find the information which I want. What I want: selling price per unit. Sorry. Standard price for the material per unit, standard quantity, actual quantity. Okay. Standard quantity for actual output. So I want here the standard quantity for actual output. है ना? See here, for finding this material quantity variance, what you want here? Standard quantity for actual output and actual quantity into standard price, है ना? So what is the actual quantity here? This is the actual quantity which you are consuming to produce 1800 unit. Now, what is the standard quantity which is required to produce 1800 unit? है ना? So for that, you can see here that if you want to produce 2000 unit, you need 20,000 kg of raw material. For 2000 unit of finished good, you need 20,000 kg of raw material. है ना? For 1 unit of finished good, you need 20,000 divided by 2000 kg of raw material. And for 1800, we have this 1800 unit. You need this kg of raw material, है ना? So this is the standard quantity for actual output, which is I can write here standard quantity for actual output. This is 18,000 kg. I need 18,000 kg standard quantity for actual output, है ना? While the actual quantity is 20,000 kg, है ना? What is the standard price here? ₹4 is the standard price of the material, है ना? The purchase price of the material. So I hope it is easy for you to calculate this. 4 is the purchase price of the material. Standard quantity for actual output. Standard quantity of raw material for actual output. This is the actual output. What is the standard quantity for this actual output? You can see here we have calculated this standard quantity for actual output. Minus actual quantity. What is the actual quantity? 20,000. We are using this to produce the finished good. ठीक है? So this way you will get this material quantity variance. ठीक है? Similarly, material price variance. If you will go here, you will find the standard price is ₹4 and the actual price is also ₹4. ठीक है? So you can see here that the standard price is 4, actual price is also 4. Whatever the actual quantity is, the answer will be nil. So the material price variance will be nil. है ना? ठीक है? So the material price variance will be nil. ठीक है? So at this place, this material quantity variance will come as 8,000 adverse, and this value will be nil. I hope it is clear. I hope it is clear. This value is nil. ठीक है? Similarly, as I have calculated this material variance, I want all of you to calculate this labor efficiency variance and labor expenditure variance from these information. Do it. Try to do this. Try to find the direct labor expenditure variance, direct labor efficiency variance. ठीक है? Do it. ठीक है? I'm waiting for you. Try to do this. Okay, it is very easy. Do this value: direct labor expenditure variance, efficiency variance, similarly variable overhead expenditure variance and efficiency variance. Do this and give me the answer. I'm waiting. Okay. See, I'll not do, otherwise you will just copy me. Okay. The way we have calculated the material quantity variance and material price variance, find the labor efficiency variance and labor expenditure variance. Find it. Find it. I'm waiting. Find it. Material quantity variance. Okay, you have given me material quantity variance. Very nice. Okay. Very good. Same way, calculate this labor expenditure variance and labor efficiency variance. Labor expenditure variance and labor efficiency variance. Okay, do this. Labor expenditure variance and labor efficiency variance. The formula of expenditure variance is what? Standard rate minus actual rate, okay, into actual hour. Okay. For efficiency variance, what will you consider? Standard hours minus actual hour worked, okay, into standard rate. Simple, very simple. Okay, find these information from the question and do this. See, I have done this from the question. From the question, find this standard rate, actual rate, and actual hour for actual output. Okay, find it. Standard rate, actual rate. Okay. Now, if you will see the question, you can see in the question it is given for the direct labor, it is given that the standard rate is rupees 8. Actual rate is rupees 8. So this way, what will be the expenditure variance? Standard rate is 8, expenditure variance is 8. 8 minus 8. What will be the expenditure variance? Now let us see how to find this labor efficiency variance. Labor efficiency variance. Now this is good to calculate. See, we need standard hour for actual output. Okay, if you will see the question, you have this question, you can see here that this is the direct labor hour for 2000 units. Okay, you can see here in this question, for producing 2000 unit, how many direct labor hours is required? For 2000 unit, you need how many hours? 16,000 hours. Hai na? So for 1 unit, what will be the time? 16,000 divided by 2000. And for 1800 units, since we are producing 1800 units, so for 1800 unit, what will be the labor, direct labor hour? Okay, standard direct labor hour for actual output. We want standard direct labor hour for actual output. So the actual output is 1800. So for 1800, what will be the standard labor hour? Calculate this. This way you will get standard labor hour for actual output. Okay. If you will calculate this value, you will get okay, let me make a column. Standard hour for actual output. If you will solve, this value will come as 14400. है ना? So 14400 hours. ठीक है? ठीक है? Then what is the actual hour? Actual hour is what? This is the actual hour. ठीक है? 14800 is the actual hour. ठीक है? This is the actual hour. This is the standard hour for actual output. This is the standard hour for actual output. ठीक है? And actual hour is what? 14,800. What is the standard rate? Standard rate is same, 8 rupees. So this way you will get the labor efficiency variance. I hope it is clear. This way you will get the labor efficiency variance. Labor expenditure variance is 0 and labor efficiency variance. If you will solve this, you will get labor efficiency variance. I hope you are doing this question. Okay. Standard are, always remember, you need standard quantity for actual output, standard R for actual output. See, this is what we have done in previous session also while doing the question of activity based costing. We find the standard for actual quantities, for actual output, है ना? So same way here also we will consider the standard R for actual output. Okay, that we need to calculate here, since the standard given here is for 2000 units and we want standard for 1800 units. So that is why we have to do it here. Okay, so this way you will get the labor efficiency variance and labor expenditure variance. I hope you have done this. Quickly tell me you have done. Okay, very nice, you have given me answer. This is 3200 adverse, I hope, and this is nil. Okay, labor expenditure variance is nil and labor efficiency variance is what? 3200 adverse. Let me put this value. This is labor expenditure variance is nil and this is 3200 adverse. Okay, now the same way as we have considered the labor expenditure variance and labor efficiency variance, please calculate variable overhead expenditure variance and variable overhead efficiency variance. Expenditure variance and efficiency variance. Calculate these values also. Okay, the way you have calculated this labor expenditure variance and labor efficiency variance, calculate the variable overhead expenditure variance and variable overhead efficiency variance. Calculate it. Okay, variable overhead expenditure variance and variable overhead variance. Calculate it. Okay, variable overhead expenditure variance, variable overhead efficiency variance. Calculate it. Okay, calculate this. See, I want you to do it now. Okay, give me answer. Give me the answers. Okay, the formula for expenditure variance is same, standard rate minus actual rate into actual R. Okay, efficiency variance, standard R for actual output minus actual R. Okay, into standard rate. Okay, do this. See, I want you to do it. Okay, this is the volume expenditure variance. This is the labor efficiency variance. You have to consider the standard rate in case of variable overhead. Okay. Standard rate means we want to find this rate for per hour. The rate. We don't have this rate per hour. Find it for Control Z. It does not. At this place also you need standard R for actual output, and you need to find the variable overhead rate. You have to find the variable overhead rate. How will you find this variable overhead rate? What is the variable overhead? This is the variable overhead. You have this variable overhead and this is the variable overhead. Okay? And for finding the rate, you have to divide it. Okay? Wait, where is the information I have in the question? Yes, this is the question I have. If you want to find here the variable overhead rate, what will you divide? What will you do? You will divide this standard variable overhead. You will divide the standard variable overhead with the labor hour, standard labor hour. है ना? So this way you will get the variable overhead rate. Rate, remember, means the cost per hour, not the cost per unit. You want here the cost, since you are finding here the cost per hour. See, in case of labor rate variance, the labor cost per unit. Similarly, at this place also, for variable overhead expenditure variance, you need this expenditure variance, you need it for per hour, not for per unit. Okay, so you need this information for per hour, not for per unit. Okay, you need this information for per hour, not for per unit. Do this. Okay. Find this value. Variable overhead expenditure variance. Okay, you have to calculate the standard rate. Rate is variable overhead cost per hour. Similarly, actual rate per hour. Okay, into actual hour. Similarly, you have to find the standard hour for actual output and actual hour into standard rate. है ना? So you have the question. You have here the question. Okay, so you can find the variable overhead per hour. How? This is the variable overhead 48 divided by 16,000, है ना, variable overhead, and this is the overhead if you have used 16,000 labor hour. So this way you will get variable overhead per hour, है ना. This way you will get variable overhead per hour. ठीक है, you will get variable overhead per hour. Similarly, if you want to find the variable overhead per hour, here you will divide these two values. ठीक है, 44 divided by 14800, you will get variable overhead rate, variable overhead per hour. So here it is 3, here it is 3. You can divide it. ठीक है. Next information what I want. Next I want the standard R. ठीक है, for actual output. ठीक है, standard R for actual output. You know the actual output is what? 1800 unit. So standard R for actual output. You know for 2000 unit you have 16,000 R. ठीक है, so 16,000 R for 2000 units. So what will be your time in case if you have 1800 R? So this way you will get the standard R for actual output. And what is the actual R here? 14800 is the actual R. So use these information, find the variable overhead expenditure variance and efficiency variance. Solve it. Solve this. Okay, you have calculated the efficiency variance, which is 3200. Why it is different? Hema, let me see. Why is this difference? This will come as 14,400. Okay, if you will solve this, you will get the value. This value is 14,400. Okay, so if you will put these values, standard R for actual output is 14,400 minus actual R is what? 14,800. What is the standard rate? 3 rupees. So this way you will get variable overhead efficiency variance as 1200 adverse. Okay. And what is the standard rate? 3 rupees. 3? Yeah, 3. Okay. What is the actual rate? 3 rupees. Okay. Into whatever the actual are, this value will be nil. So this way you will get the expenditure variance and efficiency variance for variable overhead. I hope it is clear to all of you. Expenditure variance is nil. Efficiency variance is how much? 1200 adverse. I hope it is clear. See, the question is lengthy, I know. This question is a very lengthy question, but since in examination student failed to do this question, so I want to take this question. I know the question is lengthy. Okay, variable over. Okay, Raman, Hema, direct labor. Okay. Okay, so I hope it is clear to all of you. I hope you all have clearly calculated this. See, in the question, if you will see, all these information are not given. So it is quite difficult to understand. Even if you have the solution, it is quite difficult to understand the solution. Okay, if you will see the solution, it is difficult to understand why they don't have considered these values. You don't know that. Okay, and in the solution, they have not given you anything about it. So try to consider all these things so that you will get, see, in this case you can see here that we don't have any price variance. You can see here that we don't have any labor expenditure variance. We don't have any variable overhead expenditure variance. So it is good to calculate all these things, hai na? Now the next, see, I want to do one thing. I want to calculate the next thing, which is what? Variable overhead expenditure variance, hai na? Sorry, fixed overhead expenditure variance. Fixed overhead expenditure variance. Okay, which is what? Budgeted fixed overhead minus actual fixed overhead. A fixed overhead volume variance. This is what? Absorbed fixed overhead minus okay. So with the help of these two information, you will get the fixed overhead expenditure variance and fixed overhead volume variance, hai na? You will get the fixed overhead expenditure variance and you will get the fixed overhead volume variance. Now let us see how to calculate these two values. Budgeted fixed overhead and actual fixed overhead. Let us see. You can see the budgeted fixed overhead and actual fixed overhead is same. Hai na? The budgeted fixed overhead and actual fixed overhead is same. So this value will be nil. Hai na? The fixed overhead expenditure variance, this value will be nil. Okay, now next, fixed overhead volume variance. This is the absorbed fixed overhead minus budgeted fixed overhead. See, this is the question, this is the part of the question which we have discussed in previous question also. Okay, in previous question this value was nil. Now let us see what is the, how can we find this absorbed fixed overhead. We have here the absorbed fixed overhead. Okay, minus budgeted fixed overhead. So for budgeted fixed overhead, you can use the value 48,000. It is given. Budgeted fixed overhead. 48,000 budgeted fixed overhead. Absorbed fixed overhead. Now, what is the absorbed fixed overhead? For finding the absorbed fixed overhead, what we have to consider first? Let me tell you. Absorbed fixed overhead, what you have to consider? First, the hours, standard hours for actual output. Standard hour for actual output. What is the standard hours for actual output? We all know that for 2000 unit we have the 16,000 hour. 16,000 hour. So what will be the time for 1800 unit? This will be the time for 1800 units. Standard hour for actual output. Okay, now we have to calculate the absorbed fixed overhead. Okay, we have to calculate the absorbed fixed overhead. Okay, so what will we do? We will see the rate at which this fixed overhead will be absorbed. Rate. You can see that the budgeted fixed overhead is what? 48,000. This is the budgeted fixed overhead. And the output we have is 2,000. Sorry, is 16,000 hours. है ना? So what is the rate of absorption of fixed overhead? ₹3. This is the rate of absorption of fixed overhead. Now we will consider the standard hour for actual output, which is 14400. So in this way, we will get the absorbed fixed overhead for actual output. See, for standard hour for actual output is 14400. So how much this fixed overhead will be absorbed actually for actual output? This is the absorbed fixed overhead. है ना? So this way you will get the absorbed fixed overhead. ठीक है? So absorbed fixed overhead will come as 14400 into 3. So this way you will get the fixed overhead volume variance. Okay, I hope it is clear. You can see here the fixed overhead expenditure variance is 0. Why? Because the budgeted fixed overhead and actual fixed overhead. Budgeted fixed overhead and actual fixed overhead. These two values are equal. Therefore, this value will be nil. Okay. Next is fixed overhead volume variance. How will we calculate this fixed overhead volume variance? We will consider the absorbed fixed overhead and budgeted fixed overhead. In question, this value is given. I have taken it as it is. But how to calculate this absorbed fixed overhead? For that, what we have done, first we will find the standard hour for actual output, which is this. This is the standard hour for actual output. Now we will see the rate at which this fixed overhead will be absorbed. Okay. We have this. And the R is 16,000. So this way we will get the rate at which the overhead will be absorbed. And we have this time. So in this time, what will be the fixed overhead absorbed? So this way you can calculate the fixed overhead volume variance. Okay. So this fixed overhead volume variance, the value of this fixed overhead volume variance is what? You will solve and you will give me. Give me this value. Okay, solve this and give me the value. Okay, this is okay. This is 4800 adverse. Very nice. This answer is given by Hema. Very nice. Okay. I hope it is all clear to all of you. You want me to show the formula? So if you want me to show the formula, I want to show you the formula. Wait, it is moving. Let me show you the formula also in case if you want to see the formula. See, we have this fixed overhead total variance is divided into fixed overhead expenditure variance and fixed overhead volume variance, these two formula. And that is why we have calculated this fixed overhead expenditure variance as nil, and this fixed overhead volume variance is what we have calculated. है ना? So here you have calculated the fixed overhead volume variance. ठीक है, which is 4800 adverse. ठीक है, this is 4800 adverse. ठीक है, I hope it is all clear to all of you. Now let us calculate the sales volume variance and sale price variance. Two things, and then finish. Can you calculate the sales volume price variance? Okay, I got answer from Anjali also, Raman also. Very nice. I hope, see, I know the question is lengthy, and in examination, this question will take your 1 hour. Very lengthy question. This question will take a lot of time. And it's 20 marks question. It will take, if your speed is slow, then it will take a lot of time. If your speed is slow and you have not practiced this question, then it take a lot of efforts and time. Or see, if you want me to show the comment of the examiner. See, this is the comment of examiner. Most of the examinee have not attempted this question. So you can see the question is lengthy. I will not say the question is difficult. Question is not at all difficult. Very easy question, but yes, you need practice in this question. Okay? You need practice in such kind of question. It's a lengthy question, that's it, nothing else. Otherwise, the concepts are very easy. We can do these concepts one by, if only calculating the volume variance will come, it is easy for us. If only if we have to calculate the sale price variance, it is very easy for us. While in this question, we have to calculate everything. So it's quite a lengthy question. Okay. Okay, now the next, calculate the sale volume variance and price variance. Calculate it. Okay. Sale price variance and sales volume variance. Calculate it. Sale price variance is what? Actual selling price minus standard selling price, okay, into actual quantity. So this way you will calculate the sale price variance, sale quantity variance, standard quantity into actual quantity into standard price. Standard unit you sold, actual unit sold minus standard unit which is required to sell, okay, into, so this way you will get sale quantity variance. Okay, I want you to calculate this. Actual selling price, standard selling price, calculate it. How to calculate the actual selling price, standard selling price. Do we have any information related to this with the help of which we can calculate? Yes. See, we can calculate the standard selling price. How? By adding all the cost plus profit. है ना? All the cost plus profit, you will get the selling price. है ना? If you will add all profit, all cost plus profit, you will get the selling price. ठीक है? See, we have an information here. We have an information. There is no difference between the budgeted selling price and actual selling price. So it means that, see, I try to find out the value of budgeted sell price and actual sell price, but it is given here in the question that the budgeted selling price is equal to actual selling price. It is given here in the question. See, it is given here. The budgeted selling price is equal to actual selling price. There is no difference between them. So it means that this value is nil. The budgeted selling price and the actual selling price is same. So this value will be nil. Okay, so this value is nil. Then we have to calculate the sale volume variance. Okay, so actual unit you have sold is 1800. Standard unit which you sold is 2000. And standard price you can calculate. I have already told you how to calculate the standard price. I have already told you how to calculate it. I think this is... What will we do to find... What will we do to calculate this selling price? Standard profit is given. So you can calculate this selling price and you can calculate the value. Calculate it. Okay, and this value will come as 11200 adverse. What is the budgeted profit in the question? 112. So if you will consider all these information, you will get your reconciliation statement. Okay, so you can see here, you can get the reconciliation statement. Okay, you can get the reconciliation statement. I hope it is all clear. If you have any doubt, you can ask me. Okay, you have given me the answer. Very nice. 1 minute. 1 minute. 1 minute. Okay. So let me take another question. Wait. I hope you all have done this question. In case if you have any doubt, you can ask me. Please, in case if you have any doubt, you can ask me. ठीक है. So in case if you have any doubt, please ask me. If you have any doubt, see the question is quite lengthy, I know that. ठीक है. And you have to, in question, if you will go to the solution, it is very difficult to understand even the solution, because in the solution they have not mentioned you why these values, and you don't even understand, you don't even know why they have not given you these values. Actually, if you will consider all the information and you will calculate, these value will come as nil, and that is why these value are not given in the solution. Since if you will consider them, you will do the calculation, you will find that these values are nil, and that is why they have not mentioned you these values in the question. Okay. I hope it is all clear to all of you. Now let me take a very simple sa question. Though I never prefer to take long question, but since the question was important, that is why I took this question. Okay. Now let me take two questions from the last session. Okay. This question and this question. These two questions. Okay. Okay, let me take these questions. Okay. I hope you have done the previous wala question. Please tell me you have done the last question. Shall we proceed to the next question? Please read this question. Standard profit. See, in this question now, I think I have taken some. Where is the question? Yeah, this question. I think this is your selling price, not standard profit. Let me check this value. Let me check this value. Let me check this value. Okay. Do this question. Sorry, read this question. There is some problem in question 1. Let me see that. No, that is standard profit. So they have taken the standard profit. Where is this? This is standard profit, not. See, in this case, for finding the sales volume variance, they have considered the standard profit, not the standard price. In this case, in the part of the solution, they have taken the standard price, standard profit. They have taken the standard profit at this place. Okay. Okay, do this question. Do this question. Let me tell you why. They have calculated. Please read this question. Okay, let me take a break of 5 minutes. I'll be back in 5 minutes. Then I'll take these two questions. See, I want to take two questions more. Okay. So let me take a 5 minute break. I'll come. Then I'll take these two questions. See, I want to explain. We have some new concept in these two questions. These are very simple questions. Okay. These two questions are very simple. So I'll take these two questions. Okay. सेल प्राइस क्यों लिया यार? I hope I'm live. Quickly tell me I'm live. Quickly tell me I'm live. Okay, I'm live. See, we have two more questions to discuss, but actually there was a doubt from a student. So let me clear that doubt first. See, a student asked me that, ma'am, for finding here sales volume variance, there was a doubt from Anjali. Let me clear that doubt first. Let me clear. See, this is a lengthy question. I know it is. See, in this question, we have to find the sales volume variance. Okay, we have to find here the sales volume variance, and for finding the sales volume variance, I have taken here this as 56. This is the sales margin. Okay, why I have taken this? See, in the question, it is, if you will see your book, it is given here that the sale margin volume variance is equals to sales volume variance. So the way you will calculate the sales volume variance, it is equal to sales margin volume variance. So for calculating the sales margin volume variance, we can consider the sale margin, that is the profit. So that is why they have considered here 56 value. Okay, so that is why they have taken 56 value. Now let us take this question. Okay, very simple sa question hai. Okay, it's a very simple question, but yes, it's a base of long lengthy questions. Okay, now we have a question. In this question, we have a company, and S company is a multi-product manufacturer. NS produces the unit and all overheads are associated with the delivery of the units to the customer. The overheads, the budgeted overhead of the company, the actual overhead of the company, the output, the budgeted output of the company, the actual output of the company, and the customer delivery is this and this. The number of deliveries you are delivering the product to the customer. Okay, so now in this question, you have to calculate the efficiency variance and expenditure variance. What is the efficiency variance? What is the efficiency variance? Efficiency variance. Cost impact of undertaking. Cost impact of undertaking activities more or less than standards. Okay, cost impact of undertaking activities more or less than the standards. Okay, so for this, what will we do? We will consider the standard activity. We will consider the standard activity for actual output minus actual activity. Okay, minus actual activity into standard cost of activity. Cost of activity. Okay, standard cost of activity. Now, what is standard activity for actual output? See, this is the activity. This is the actual activity for actual output, 19. है ना? Now, what is the standard activity for actual output? What is the actual output? Actual output is 2100. 2100 is the actual output. Okay, if we have output 2000, for 2000 output, we have activity standard activity as 20 delivery. For 2000 output, we have 20 deliveries. Okay, so what will be the delivery if I have one output? And what will be the delivery if I have 2100 output? 20 upon 2000 into 2100 delivery. So this is what standard activity. If you will calculate this now, what will you get? You will get here 21 delivery. This is what standard activity for actual output. This is the actual output. Standard activity for actual output. What was the standard? We know that for 2000 output, we need 20 delivery. This was the standard. For every 2000 output, we need 20 deliveries. So we need standard for actual output. What is the actual output? 2100 is the actual output. What will be the standard number of delivery for actual output? So this way you can calculate the standard number of delivery for actual output, 21 deliveries. Okay. What is the standard cost of activity? If you will divide them, you will get, you have to calculate the cost per delivery. So if you will divide the cost with number of delivery, you will get the cost per activity. है ना? Standard cost per activity. Okay. So this way, if you will divide it, you will get what? 200. So this way you will get here the value 200. Okay. And this way you will get efficiency variance, which is 400. Okay. Favorable. Okay. This is efficiency variance. Now, next, what expenditure variance? How to calculate the expenditure variance? How to calculate the expenditure variance? Cost impact of paying more or less. Then standard for actual activity undertaken. Now, what is this? Can you elaborate, ma'am? Yes. This is standard activity for actual output. This is the standard activity for actual output minus actual activity. Okay. Into standard cost of activity. Sorry, I made it wrong. Standard cost for actual activity minus actual cost for actual activity. Yeah. So what is the standard cost here? Standard cost for actual activity. What is the actual activity here? 19. Standard cost 200. Standard cost per activity is 200. Actual activity is this. So standard cost for actual activity. Standard cost for actual activity will be this minus actual cost for actual activity is this 3900. So this way you will get the expenditure variance. I will repeat it again. Okay, so don't worry. Okay, see, because we have the next question based on the same thing, so let me repeat it. Okay, what is the efficiency variance? What is the expenditure variance if I have activity? For example, in this question, you know that we have activity. Okay, now first, efficiency variance, cost impact of undertaking. Since if there is change in activity, okay, if there is change in activity, what is the impact of that change in activity? Cost impact of that change in activity. Okay, that will be efficiency variance. Okay, for example, I know actual delivery will be 19. This delivery is for actual output, है ना, 19. I can deliver 2900 units through how many number of deliveries? 19 deliveries. Now I want to find the standard delivery for actual output. I know the standard for 2000 unit. I know the standard, but I want to know the actual number of delivery for, sorry, I want to know the standard number of delivery for actual output. For this, I want to know the standard number of delivery. I know that for 2000 it is 20. This is the standard number of delivery for the standard out for this 2000 unit. But I want to know the standard delivery for actual output. That is, I want to know it for 2100 units. Okay, so this way I'll get the standard activity for actual output. This is my standard activity for actual output. So this way you can see that actually in standard, if I am delivering 2100 unit, if I'm selling 2100 unit, standard activity is required. Standard number of delivery is required 21. While we have done all the 2100 units, we have delivered all the 2100 unit in 19 deliveries. Okay, so it's a favorable variance. We have, standardly, we have to deliver it 21 times, while actually we have delivered it 19 times. So we have a favorable variance at this place. Okay. What is the expenditure variance? The cost, what we are paying for these activities. Hai na? So here, standard cost for actual activity. Okay, this is the actual activity. What is my standard cost for this actual activity? Okay, so what is the standard cost? 200 per activity is the standard cost. Standard cost for actual activity will be this 200 into 19. Okay, minus actual cost. What is the actual cost? 3900. So this way I'll get this expenditure variance. So this way I'll get the expenditure variance. Okay, now we have second question exactly the same, and this question I want you to do it. Okay, the same question, but in this question we have to calculate the expenditure and efficiency variance for these three activities. We have three different activities. Okay, we have this activity, we have this activity, and we have this activity. So we have to calculate the expenditure and efficiency variance for this activity. Similarly, expenditure and efficiency variance for this activity. Similarly, expenditure and efficiency variance for this activity. So for all these activity, we have to calculate the expenditure and efficiency variance. If you have any doubt, you can ask me. In case if you have any doubt, you can ask me. Okay. Otherwise, please try to do this question. Okay. The same formula you can use. We have the formula. We have these two formula. Okay. Standard cost for actual activity. This is the formula for expenditure variance. है ना? If they ask you to calculate the expenditure variance, what the formula you can use here? The formula which you can use here is standard cost for actual activity minus actual cost. This way you can calculate what? Expenditure variance. Okay, this way you can calculate the expenditure variance. Similarly, if they ask you to calculate the efficiency variance, use this formula. If they ask you to calculate the efficiency variance, use this formula. use this formula. ठीक है, standard activity for actual output, actual activity into standard cost for actual activity. So this way, these two formula we have, and you have to use these two formula for solving the next question. ठीक है, you can use these two formula for solving the next question. Okay, I'm taking these two formula. ठीक है, calculate the efficiency variance and expenditure variance for indirect material. This activity, indirect material. ठीक है, try to calculate it. ठीक है, I'll extend the class, today's class. ठीक है, but try to calculate it. See, I'll give you time. First, you try to calculate it. We have a formula. First, try to do it at your own. ठीक है, then I'll do it for you. ठीक है, we have these two formula. Actual cost. ठीक है, these two formula, use these two formula, and please try to do this at your own. ठीक है, I want you to do this. I want all of you to try it at least, then I'll do this for you. ठीक है, first try to do this at your own. ठीक है, we will extend today's class. Okay, we have these two formula, and I want all of you to please at least try to do this at your own. Okay, I lost the page of your query. Let me open. Okay, try to do this. Try to do this question. Oh shit. Oh, I'm so sorry. Shit. Okay, let me do this question again then. In that case, the board was freeze. I just saw the board was freeze. Okay, let me do this question again then. See, we have two formula here. We have this question. N and S, NSC is a multi-product manufacturer. NSC produce the units, and all overheads are associated with the delivery of units to its customer. ठीक है, in this question you can see the overheads, budgeted overheads and actual overheads. In this question you can see the outputs. ठीक है, and you can see the customer delivery. ठीक है, now in this question they ask you to calculate the variable overhead efficiency variance and expenditure variance. They ask you to calculate variable overhead efficiency variance and expenditure variance. What is the formula for calculating the efficiency variance? The standard activity for actual output minus actual activity into standard cost of activity. So this is the formula we have. We have this formula, standard activity for actual output. You can see here that we have the actual activity. What is the actual activity? 19 is the actual activity. है ना, 19 is the actual activity. And we want standard activity for actual output. What is the actual outcome? This is the actual outcome. We want standard activity for this actual outcome. Okay, so let us first consider, see here, standard for standard 2000 output, the standard number of delivery is 20. Okay, so for standard 2000 output, we have standard 20 deliveries. This is the standard, है ना? कि if we produce 2000 output, we will deliver those 2000 output in 20 deliveries. This is the standard. ठीक है, this is the standard we have. But what if we produce 2100 output? This is my actual output. If I produce 2100 output, then standard number of delivery what will be what? 20 divided by 2000 into 2100. So this way, what will I get? This way I'll get standard delivery for actual output. I hope it is clear. This way I'll get standard delivery for actual output, which is I think 21. Okay, then standard cost of activity. What is the standard cost of activity? You can see this is the standard cost, this is the standard output, and this is the standard delivery. Okay, delivery is activity. Activity is number of deliveries activity. So I want standard cost of activity, not the standard cost for unit. Okay, so I'll divide these two values so that I'll get the standard cost of activity. है ना? Standard cost of activity will come as 200. Standard cost of activity will come as 200. Okay, so this will come as 200. So this way I'll get what? Efficiency variance. See, my efficiency is good, it is favorable. Why it is favorable? See, they are expecting to deliver these 2100 unit in 21 deliveries. This is the standard. They want to deliver these actual output 2100. If they consider the standard, then 2100 will be delivered in 21 deliveries. But actually they are delivering it 19 deliveries. So it means that it is a favorable variance. And so this way you can see it's a favorable variance. Okay, efficiency is favorable. Okay, okay, next is expenditure variance. What is expenditure variance? Standard cost for actual activity. What is actual activity? 19 is actual activity. You can see here, this is the actual activity. They're asking you standard cost for actual activity. What is the standard cost for activity? This is the standard cost of activity, one activity. This is the standard cost of one activity. If I have actual output, actual activity is 19. So what will be the standard cost of actual activity? See, they're asking you to calculate standard cost for actual activity. What is my actual activity? 19 is my actual activity. So what will be the standard cost is this? Standard cost for actual activity will be what? 200 into 19. This will be my standard cost for actual activity. What is my actual cost? What is my actual cost? 3900 will be my actual cost. है ना? So this way 3900 will be my actual cost. So this way I'll get expenditure variance. है ना? So this way you can get efficiency variance as well as expenditure variance. Okay. Okay, we have one more question. Okay, see, we have one more question. This question. In this question also, you have to calculate. See, in this question also, you have to calculate the expenditure variance and efficiency variance in using activity-based costing. Means for activities, you have to calculate the expenditure variance and efficiency variance. You have the activity indirect materials. So for this activity, you have to calculate the expenditure and efficiency variance. Similarly, you have product testing. For this activity, you have to calculate the expenditure and efficiency variance. Then you have energy. For this activity, you have to calculate this expenditure variance and efficiency variance. Okay, so this is what I expect all of you to do this. Okay, we have this formula, efficiency variance and expenditure variance. Let us first do for indirect material. Let us do this question for indirect material. Let us calculate the expenditure and efficiency variance for indirect material. Okay, first indirect material. Can you calculate these two? At least try one question. Okay. Standard activity. Let me see if you have any doubt, any question. Okay. Can you calculate this? Standard activity for actual output. What is my actual output? See, in this question, you have 80,000 unit. This is the actual output. What is the standard quantity for actual output? This is my standard quantity. Okay, per unit. If I have 80,000 unit, so what will be my standard quantity, standard activity for actual output? This will be what? 0.5 into 80,000. Okay, then what is my actual activity? 48,000 kg. This is my actual activity. Okay. And what is my standard cost for activity? What is my standard cost of activity? This rupees 20. So this way I'll get the efficiency variance for indirect material. Okay. How can we calculate the expenditure variance? Standard cost for actual activity. What is the actual activity? 48,000. 48,000 is the actual activity. Standard cost. What is the standard cost? This is the standard, sorry, this is the standard cost, 20 rupees. 20 rupees. What is the actual cost? Actual cost for the activity. This is the actual cost for the activity. See how easy it is. So this way you will get the expenditure variance. Okay. Expenditure variance for material. This way you will get expenditure variance for material. I hope it is clear. You want to go slow? See, I can wait. I have no problem. I can wait. Okay. This way I have calculated the expenditure and efficiency variance for indirect material. Okay. I want all of you to try the next portion at your own and give me the answer so that I'll be confirmed that you understand this concept. Okay. Let me do it in 2 page and I expect you to do this. Okay. I'm waiting and I want answer from you. See, it is very easy to solve this question. Okay. So I'm waiting. Okay, see, the way I have calculated the expenditure and efficiency variance for indirect materials, similarly, calculate the expenditure and efficiency variance for product testing. Okay, expenditure variance. Okay, and first take efficiency variance, then expenditure variance. Okay, calculate it. Give me the answer. See, I'm waiting. You will give me the answer. I'm waiting to get answer from all of you. Okay. What you have to do for calculating the efficiency variance, we have standard activity for actual output. What is my actual output? We are producing in this question, we are producing 8,000 unit. You can see it is given, we are producing 8,000 units. So this is the actual output. Standard activity. What is activity? Product testing is the activity here. See, in this question, you can see that product testing, this is my second activity for which I want to solve this question. Okay. Standard activity for actual output. Okay. This is actual output. 80,000 is the actual output. What is the standard activity for actual output? Standard activity. See, for 1 unit, they need 10 minutes. So how much time they need? Standard time for actual output. How much time they need? Standard activity, standard time, standard product testing time for actual 80,000 units minus actual activity. What is the actual activity? This is the actual activity. Okay, into standard cost of activity. What is the standard cost of activity? This is the standard cost of activity. 3 rupees. है ना? This is the way to calculate efficiency variance. Similarly, calculate the expenditure variance. Doubt hai? If you have any doubt, ask me. See, I'm waiting. If you have any doubt, ask me. See, these questions are very simple. And this question was there in your examination in November 2019. This was there in your examination in November 2019. Calculate these values. Give me the answers. Expenditure variance, standard cost for actual activity. What is the actual activity? This is the actual activity. 740. Okay. Standard cost. What is the standard cost? Rupees 3. Standard, this is the standard cost for actual activity. Minus, what is the actual cost? This is the actual cost. This way you can calculate the expenditure variance. You have calculated the efficiency variance, and this way you can calculate the expenditure variance. Okay, so you have any doubts? See, this way you can calculate the next one also. Anjali. Give me the answer. See, this way you can calculate. Write these formula. If these formula are not written in your book, please write these formula. This will help you to do the question very easily. Okay, write it somewhere. Do the next question, next portion of this question. This wala energy, this expenditure and efficiency variance due to energy. Give me the answer if you can give me the answer. Efficiency variance, expenditure variance. Okay, Raman has given me answer. Very nice. So this way you can calculate it. Okay. Okay. Can you interpret the result? They have asked you to interpret the result. They ask you to interpret the result also. See, if you consider these two things, expenditure and efficiency variance, you will get what? This as adverse variance. This is what? 160 adverse. This is 20,000 favorable. And this is 1,80,000 favorable. This is 30,000 adverse. Okay. So see, if they will ask you to comment on it, interpret the result, you can see here you have adverse variance at this place. So why is this variance adverse? Why is this variance your standard activity and your actual activity? Your actual activity are more than your standard activity. Means you are consuming more indirect material than the actual indirect material. Why? It might be possible that you lost some material during manufacturing, or you receive some inferior product, है ना, or some obsolete raw material, ठीक है, or you have not received the material as per your specification, ठीक है. So many reasons because of which you are using more raw material than the standard, है ना. So this way, and you can see here, for example, you have efficiency is here favorable. Product testing. Why the product testing is favorable? It might be possible that now the people are more skilled. Okay, that is why they need less time to test the thing. है ना? If the people are skilled, it will take less time to test the thing. Okay. So it might, so such thing you may notice and you may write in the question. Okay. So you have to find the reason why is this variance is adverse. Okay. What could be the reason because of which this is adverse? Okay. Why this is so favorable? Okay. What could be the reason? Okay. So this way you can interpret the question. Okay. Okay, you have given me the answer of next also, indirect. See, you have not written for which you are writing, like if for indirect material or for product testing or for you have not writing in this way. So I didn't understand for which you are giving me answer. Calculate these variance for energy also. Calculate these variance for energy also. I'm writing it here. Okay. See, efficiency variance, standard activity for actual output. Okay, your actual output is 80,000 unit. Okay, energy, how much energy you will consume? 4 minutes per machine time. 4 minutes. For 4 minutes, you will standard activity for actual output. Your actual output is 80,000 and standard activity is this. Okay, minus your actual activity is this. So this way you can get the efficiency variance. And how will you get the expenditure variance? Standard cost for actual activity. What is your actual activity? What is your actual activity? This is your actual activity. Standard cost for actual activity. What is your standard cost? This is the standard cost. Standard cost for actual activity minus actual cost. What is the actual cost? This is the actual cost. So you can see, if you know these formula, it is very easy for you to solve the question in which they will ask you to find the expenditure and efficiency variance. Okay, the question in which they ask you to calculate the expenditure and efficiency variance in by using what? Activity based costing. Okay, and further you have to analyze the reason. Okay, why the variance are adverse or favorable, and you have to write the reason in the question, in the solution. Okay, you have to write the reason. If there is adverse variance, think why, what the reason because of which the variance is adverse. What could be the reason? If you have favorable variance, think about it, why it could be favorable. Okay, so this way try to find out the reason why is this variance is favorable and adverse. Okay, and accordingly write it in the solution. I hope it is all clear. If you have any doubt, you can ask me. Okay, then let me finish the session. Goodbye. Take care.